All right, folks, this is Taylor Horton checking in with the nightly video for June 1st. So welcome to June, brand new month, brand new opportunities. And if you're a fan of the squeeze setup, there's no lack of squeezes right now. So as far as the indexes go, daily squeeze here for the S&P 500. The Qs got a daily squeeze coiling up the small caps. We got a daily squeeze over here. If you check out the Dow has a daily squeeze. And if you go sector to sector, you can look at XLK, which is technology. And here we got a daily squeeze. You can check out, say, the financials. They're finding a daily squeeze hitting new highs today. You have the energy sector, daily squeeze in the industrials, daily squeeze in the transports. So in plain English, everything building up energy right now. You have the two phases of the squeeze. There's the buildup of energy phase, and that's basically the +1 to -1 ATR action. So if you take a look at my charts here, I got 3 different sets of Keltner channels, and they measure 1, 2, and 3, or -1, -2, -3, average true range moves from the 21 EMA. So the buildup of energy part of the squeeze, it's basically all this lackluster back and forth chop between +1 and -1. Ultimately, as we focus on the structure of the squeezes, we look to go to the next phase, which is the release of energy phase. And the release of energy phase, which is everybody's favorite, that's when you get the directional move into about 2 to 3 plus ATR to the upside. So that's my thought process right now, is that despite the choppiness, you got the squeezes across the board. There's a bullish structure to the squeezes. We're above the 21. We have stacked EMAs. So we're going through the buildup of energy phase, and what I'm looking for over the next 1 to 2 weeks is that we release the energy in the form of a move to brand new all-time highs for the Qs, for the SPY, for pretty much everything here. So the major thing to keep in mind is in the buildup of energy phase, where if you look at Caterpillar here, so in the options room, we got a few different positions on Caterpillar, a couple put credit spreads, whole bunch of nothing here, but it behaves well. This is just a squeeze going through the buildup of energy phase. -1, +1, a whole bunch of back and forth. Here is when, as a swing trader, you have to develop the patience and the discipline to hold through the buildup of energy phase. That way, once the energy gets released and the stock makes that +2 to +3 ATR move, you're in a position to get rewarded. So think back over here. Daily squeeze for Caterpillar, buildup of energy phase, +1, -1, +1, -1. You can't let that shake you out. If that shakes you out, once the squeeze finally releases the energy, you're not there to benefit. So that's where we are right now. Squeezes everywhere, but they're still going through the buildup of energy. So I think the major thing to focus on is, my opinion, if you look across the board here, weekly charts, daily charts, it's a bullish structure. So I'll be the first to admit when and if that changes, but based on the structure here, I'm looking for the squeezes to fire to the upside. So for me, it's a matter of, where can I plant a seed, so to say, in some of the cleanest squeezes in the market, and then can I sit on my hands long enough to let those unfold? So we got the positions in Caterpillar, and as far as tech goes, good looking daily squeeze in tech. I'm looking for that to move into new highs over the next couple of weeks here. So Google is your textbook example. Get the daily squeeze here a couple of weeks ago in the options room. We're selling that put credit spread. It behaves well during the buildup of energy phase, and now it's getting on to the next phase, the release of energy. So I think you want to plant a few seeds in good-looking squeezes, but then you've got to have that patience and the discipline to stomach the chop, so to say. That way, once things potentially heat up here, you got your position. You're in a great position to potentially bring home some profits. So Google looks good here. We got the put credit spread over there. Caterpillar, I think, also looks phenomenal. And with the squeezes on the index, you could simplify the process and just take your trade on the index. So one thing I'm eyeballing here is the NDX. Got the daily squeeze, got the histogram going positive. We're well above the 21, but we're not too far away from the 21. We're still there at the buy zone. You got the stacked moving averages. So for me on something like this, I'm looking for a slightly out the money put credit spread. If I can get short strikes under the 21 EMA with a good 20 to 30 days to expiration, that's my bread and butter. Find the squeeze, sell the credit spread, sift through the buildup of energy phase, and then get rewarded once the energy gets released. So across the board here, you got squeezes. What you don't want to do, I think, is overwhelm yourself and get too much exposure. Whether it's a squeeze in an industrial stock, a technology stock, a semiconductor stock, ultimately, chances are what the outcome here of the daily squeeze in the indexes is going to determine the direction of the stocks and the other sectors. So S&P 500 can fire the squeeze long here. You probably see some upside for the Qs. You probably see some upside for financial stocks, industrial stocks, etc. So it begins and ends here with the structure of the squeezes on the index. Then you find something like a Caterpillar, daily squeeze, stacked EMAs, really good looking uptrend. You take your weapon of choice. You can buy calls, you can do a debit spread. I'm a put credit spread kind of fella. But you find that structure, you have the timing here of the overall market squeezing, you take your entry, and then you hold through the back and forth chop here. Buildup of energy often leads to a release of energy, but you only benefit from the release of energy if you can stomach a little bit of the chop. So structurally, everything looks good here. Squeezes keep on squeezing, and I do think over the next few weeks you're going to be in good shape if you're long things that look like Caterpillar. High probability setups, you mix those with the overall timing of the market here, and I think that's where some of the better opportunity for the month of June is going to be. So we're going to keep on keeping on. We've got positions in Caterpillar, got positions here in Google, and I'm thinking the next position here, keep things simple, because we are simpler trading, is a put credit spread in the Qs, looking for a move into new highs over the next few weeks. So we wish you well in the new month here, and if you haven't already, go on ahead and subscribe, and we'll talk to you in the next video.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me